Welcome to the Virtual Institute of Accounting and Finance. As you are in the picture from the previous lessons, we are studying paper FIA FA1 from ACCA, which is about recording financial transactions. In the past lessons, we have studied about the business transactions, type of business transaction, and also what is a business from chapter 1. In today's lessons we are going to see about a business is separate from its owner. The crucial point to grasp is that a business must always be treated as a separate entity from its owners when preparing account for the business. This accounting convention applies whether the business is carried on by a company, a sole trader, or by a partnership. A business is a separate entity, distinct from its owners. This applies to all businesses. When a sole trader, for example, draws money from the business for personal use, there are two aspects to this: money leaving the business entity and being received by an individual who is of course separate from the business. For accounting purpose, it is important to keep business assets and liabilities separate from personal assets and liabilities of the owner or the proprietor. So far we have spoken of assets and liabilities of a business. We shall see that in accounting terms, a business is always a separate entity from its owners, and it is a generally accepted accounting principle. So, first of all, let's make sure that some of the terms like entity, business, company, and firm used in this section are clearly defined. An entity is the most general term, referring to just about any organization in which people join together to achieve common goal or a common end. In the context of accounting, it can refer to a multinational conglomerate, a multinational company, or a small club, a local authority, and so on. A business is also a very general term, but it does not extend as widely as the term entity. For example, it would not include a charity or a local authority. Any organization existing to trade and make a profit could be called a business, including a sole trader, as we have studied in lesson 2. A company is an entity constituted in particular legal form, usually involving limited liability for its members. Companies need not to be business. For example, many charities are constituted as companies. On the other hand, a firm is a much vaguer term. It is sometimes used as loosely as a business or a company. Some writers more usefully try to restrict its meaning to that of an unincorporated business, a business not constituted as a company, for example, a partnership. This was all for today. So, in the next lesson, we are going to study the business documentation. But for now, thank you for your attention.